Hello, and welcome back to First on Fraud, the real estate podcast that shines the light on the dark side of real estate. I'm your host, Sarah Frano, along with my always hilarious and funny and smart Matt Sager. Hi, Matt. Happy New Year's.
Oh, happy New
Oh, no.
Year, sir. Oh, yes.
Oh, my.
I'm ready to have some things behind me, like the holidays that you're supposed to enjoy your time with family. And I
Of
do,
course.
and I love my family. I love my family. But I found a new tradition. I found something that we're going to do new this year. And that
What's that?
is to keep my mother-in-law occupied. I'm going to have her refinance her property because she just did a refinance over the holiday. She was out and gone the whole time. She had no idea how long it takes to sign all those documents. It's a lot of work. It takes a lot of time. So the holiday was nice because she spent all her time signing documents, working on her refinance. So we have a new family tradition.
Oh, yeah.
Mother-in-law is going to refinance the property every Christmas holiday.
I love that for you and your family. And who doesn't love a lower interest rate? So, a happy new year to all of our listeners and watchers. And speaking of watchers, Matt, you know how companies, in particular ours, love analytics and their year end reporting? Well,
Yeah, they're all data nerds. They need the data. They love
right.
to analyze the data. Nerds.
Well, I got the year-end report for this podcast, and it had a pin map of all of our listeners and watchers all over the world. And I'm so happy and grateful that we've had that kind of reach with this podcast. That's amazing. So thank you everyone for tuning in all over the world and for listening. But there was one place that really kind of surprised me.
It's got to be Portugal, right?
Wait, no, it wasn't Portugal, but why do you think it's Portugal?
Because I was just there. And while I
Mm.
was there, I was out advertising and promoting First on Fraud. I was telling everybody, like, hey, assim como os pastéis de nata, a fraude tem camadas, e primeiro na fraude ajuda-o a descascar essas camadas. So that's what I was telling everybody while I was out there.
So what did you just say?
I was touting First on Fraud and comparing it to their Portugal's famous little pastries. They're called pastéis de nata. They're these incredibly, there's this, it's a buttery, flaky shell with this cream pastry that's just layered. And what I said was, so just like those little pastries, the pastel de nata,
Mhm.
fraud has layers, and First on Fraud helps you peel back the layers.
Matt Sager, listen, I had no
Mm.
idea that you thought of us so poetically. Do we need to do an episode from a cafe in Portugal?
Wait,
I'm manifesting
don't,
right now, Matt. I'm manifesting.
I know, don't tease me. Don't tease me here because yes. Are they going to send us out to Portugal to do this? Because if
I'm telling
they
you,
do,
manifest it.
sign me up.
No, listen, it's not Portugal. It's Iceland.
Wait, Iceland? Okay, Iceland? That surprises me. That's pretty cool. So, hey, Iceland, thanks for listening.
I know. I'm so curious as to what type of real estate fraud people in Iceland experience. First American is an international company, and I meet regularly with our non US operations, and they do have different fraud. So, hey, Iceland, we want to hear from you. What type of real estate fraud do you experience? And for all of those listeners that are beyond our borders, coming in 2026 will be an episode on fraud outside the US. So, drop us a line at firstonfraud@firstam.com and tell us what type of fraud you experience. We want to hear from you for an upcoming episode.
What are we talking about today?
We're going to talk about a number that should freeze every homeowner,
Right.
lender, and real estate agent. I know. I
I
couldn't
get it.
help myself.
Iceland, freeze. I get it. I got you.
I
That's a
couldn't
good
help
one.
myself. Listen, $207,000. That's
You
the
have my
at
attention.
I know.
Go
That
on.
is the average loss tied to a refinance fraud claim, according to the newest national data from the American Land Title Association, which we call ALTA.
ALTA. I'm not going to start this debate with you right now. ALTA.
That Ooh, ALTA.
ALTA. I could do this all day. What is it?
Listeners, listeners. Matt
Listen,
and I have been
listeners.
having a decades-long debate over how to say Matt,
Don't do it.
Nevada,
Don't do it. Don't. You did it.
Nevada,
You mean
Nevada,
Nevada. Nevada. I could do that
Nevada.
all day too.
Matt, you don't get
And don't.
a taco in a casa, you get a taco in a casa in Nevada. Okay?
That has. Those words have no correlation to one another. So when they named the state of Nevada, they were thinking about tacos in a casa? No. They thought of Nevada. It's pronounced Nevada. So I okay, you know what? I'm just gonna let you have it. You're right. I'm wrong.
Thank you.
There.
Thank you.
Just yes, you have it this time. You're right. I'm wrong. $207,000 on a refinance fraud. That's not a fraud law, Sarah. That is some Stephen King psycho horror thriller slasher movie. That is some scary stuff right there.
It is. But listen, hey, plot twist. Stay tuned to the end because we're going to reveal the newest thing to protect homeowners in these type of cases.
Yep. And spoiler, you're going to want it. And it's not the Matt Sager is your guardian angel endorsement, because I have been working on that. I have been working on it. Hasn't been approved yet, but still working on it.
I would buy that. I would buy that.
Oh, thank you.
Sell it on
I'll let you
Etsy,
call
Matt.
it. I'll let you call it ALTA.
For more stories behind the headlines, subscribe to First on Fraud and stay one step ahead of the issues that impact your transactions, your timelines, and your bottom line. Refinances aren't the safe, boring transaction people think it is. And here at First on Fraud, we like to keep it exciting and interesting. And refinances are something normally people think, oh, it's kind of boring topic, but it really isn't. Not when it comes to fraud.
No, you're right, Sarah. Refinance is not the same as what it used to be. So in November, ALTA, ALTA, and Milliman analyzed more than 10 years of title insurance claims.
It's a lot.
And the big headline, it's a lot. They analyzed their data. Here's what they found. 40% of refinance losses are due to fraud and forgery. The average fraud forgery claim cost that staggering number you mentioned before, $207,000. That's 7 times higher than most other types of title claims.
I read this study, and we're always grateful for the ALTA commissioning studies that highlight the value of title insurance. But I think the categories could be different if you broke it down between rate and term refinances and cash out refis. Because listen, I guarantee there is no fraudster out there who are like, I'm going to get them a lower interest rate. Bob and Judy really deserve a lower monthly payment. Like, it doesn't happen. That's not the kind of fraud that's happening out there. Fraud is on those cash out refinances.
You're saying fraudsters don't have Bob and Judy's best interest at heart?
No, they don't care.
And
They're not looking to help them out on a monthly payment.
you're right. I think
Mhm.
these numbers, this information that's coming out about refinance fraud, it's got to be the fake cash out loans. 'Cause rate term, that's really low risk.
But you know what? These numbers really don't surprise me at all. Fraudsters want the money, and there are only two ways to get it. One, you either sell the property like you own it, or two, you borrow against it like you own it. Either way, it's equity stripping.
So Sarah, let's kind of start with the basics. Let's look at what's going on with this refinance fraud. It's a form of equity stripping, and equity stripping happens when criminals impersonate the owner, sign the documents, pull out the cash, and disappear.
Well, that's right. It's a form of identity-based credit theft, but instead of someone racking up charges on your credit card, they've drained the equity from your home. And I don't know about you, but I would much prefer someone steal my credit card than refinance my home. Do not take that as a challenge, fraudsters, because I know they're listening too, but you couldn't anyway. I have everything locked down. We're going to tell you at the end how to do that. With credit card theft, you don't have to go to court and spend money hiring an attorney, paying court costs and litigation fees in order to prove you didn't take out the money. And that's what happens with loan fraud.
Loan fraud, it's not easy. You don't get to just call your company and say, "Hey, unring that bell." Oftentimes with credit card fraud, as you were saying, it's a lot easier to unring that bell. What are the costs involved with the of undoing refinance fraud?
Yeah. So this was to me the most interesting part of this study because that $207,000 number, those include the legal fees that people incur when they have to undo this type of fraud. You want to guess how much the legal expenses make up of that $207,000? And before you answer me, Matt, I just have to
Okay.
say that one of my favorite things about you is that anytime I, ping you in our messaging system and say, "Hey, Matt, are you free?" You always respond with, "No, I'm expensive."
I well,
True lawyer
I
form.
but I'm worth it? Aren't I'm expensive, but worth every penny?
You're worth every penny. You're absolutely worth it. Okay. Uh, so do you wanna guess how much that 207 is of made up of legal expenses? Just guess.
Lawyers are expensive, so I gotta
Mhm.
imagine it's up there, and the number that comes to my head, if it's $207,000, how much of that is legal fees? I'm gonna say, 90,000 bucks.
That is high, but probably also not unreasonable and not a number that people don't experience, but the average was just over $68,000. Now, imagine owning your home, diligently paying it off, or owning your home long enough that you've built up, market equity, and then a fraudster comes along and just takes out a loan on your property. You have no idea until you get a foreclosure notice on your door that your property is about to be foreclosed on. You have to hire an attorney, and then you have to spend almost $70,000 on average just to prove that you didn't take out this loan. That's absolutely insane, but it's also the reality of the situation.
You're right. That's insane, and the other reality is, it's the time factor. It takes a long time to go through the courts because they move so slowly. So, while your property is tied up in the judicial process of trying to unwind and undo that fraudulent mortgage, trying to refinance or selling your property is incredibly challenging.
And that's really the unfairness of crime, isn't it? You're minding your own business, and a wrongdoer, fraudster can just come along and muck life up like this. It's really, really unfair.
We all want to know, why is this happening? Why are we seeing so much more of this now?
There are a couple of reasons. Home equity is irresistible. With rising equity values, scammers are just circling like seagulls at a beach waiting for you to drop a french fry. Because we're not talking about 35 to $50,000 worth of credit lines. We're talking hundreds of thousands of dollars, sometimes even millions. And for a fraudster, that one single payday is golden, right? And then, you
Oh,
think about it, documents right now are easier than ever to forge and create, especially with AI. It's easy for them to make up IDs, W-2s, pay stubs, and everything, and it looks really real. And then when it comes to speed and what consumers are expecting, consumers now expect things to move like this, and speed can sometimes equal less verification. I mean, Matt, you were talking about your mother-in-law refinancing. I'm sure you went online and just, looked. And as soon as you Google refinances, there's going to be tons of platforms that pop up that promise to approve you within minutes, right?
getting the approval could be fast and easy.
Yeah, then you add in non-institutional lenders, those hard money lenders that that loan based off of the value of the property, not the credit worthiness of the borrower. And you add all these things up, and you really have this perfect ecosystem for refinance fraud.
Well, I guess if there's any silver lining, the good news is we're going to have plenty of things to talk about. So, no shortage of fraud.
No,
So,
there is not a shortage of fraud.
uh, okay, so we've talked about the problems, we've talked about the issues and how expensive it is, but let's talk about the fix. What is there anything that homeowners can do to protect themselves and their homes?
Listen, the number one thing that I recommend, I do this for myself and recommend to all my friends and families, colleagues, is to always freeze your credit with all three credit bureaus. It's very easy and simple and free to do. If anyone tries to take out a loan in your name, when the lender tries to pull the credit, they won't be able to. You can also place a fraud alert on your credit with those credit bureaus, which encourages lenders to take additional steps to verify your identity before extending credit. It's free. There are different levels with lengths of time. There's the initial, extended, and active military duty. Really important for people who are in military duty, especially if they're serving, to make sure they freeze that credit and put these alerts on their accounts. So you want to select the one that is best for you. Along with those credits, I recommend credit monitoring with credit inquiry notification alerts. It's great, but you want to make sure that you set it for both hard and soft pulls. Soft pulls don't always pull on trigger alerts, but for you, it could be an early indication that something is amiss. And we've talked about it before here on First on Fraud, so it's worth mentioning again. Sign up for those county property alert systems. And if you are a First American policyholder, sign up for our owner portal so that you get those property alert notifications. And we promised you at the top of the hour, and I'm so excited for this to finally come to the market. That is the new ALTA 49 and 49.1 endorsement, which provides owners with post policy fraud coverage. Matt, you want to get technical and legal for us?
Yes, I do, because you say Alta and I say Alta. You say tomato, I say tomato. You say Nevada, I say Nevada. Tomato, tomato, Nevada, Nevada, Alta, Alta. Let's call the whole thing off. Okay. So the ALTA endorsements 49 and the 49.1 both provide insurance against loss or damage sustained by reason of a defect in title caused by a forgery of a deed or mortgage that's recorded in the public records after the date of the endorsement, in which the insured was impersonated as the grantor.
What's the difference between the two?
Well, the ALTA 49 and the LTA 49.1 are very similar in their coverage. The difference is really a matter of timing. It's a question of whether or not you already have an existing ALTA owner's policy or if you are getting an ALTA owner's policy. So if you are getting an ALTA owner's policy,
Like I'm buying a property right now.
you're
I'm buying a
buying the
property right
property
now.
right now. You're
Okay.
buying the property right now. So you're beginning a new ALTA owner's policy. That's when you would get the 49, the ALTA 49 endorsement. If you already have an existing ALTA owner's policy, then you'd be asking for or getting the ALTA 49.1. There's really no reason to have those endorsements issued on an ALTA homeowner's policy or what we call the Eagle policy because that coverage is already provided. So this coverage, the ALTA 49 to 49.1, would be for ALTA owners' policies.
So, like my parents who have owned their house forever and ever before the Eagle policy even existed, tell them to check it out. Look at their
Check
policy
it
and
out.
go get the 49.1 as an endorsement to add onto their policy now.
Yeah. So we've been busy filing our rates and forms with the states. So it's not currently available in every state, but where we need to and can file it, we're actively getting it filed so we can make it available.
Good. Now, if a homeowner wants to buy a 49.1 endorsement from First American, how can they do that?
Simple. Contact your local First American office or your First American policy issuing agent. And any of those offices can issue the endorsement as long as you have a First American policy. And if you're buying a property, make sure to ask for the 49 endorsement if the Eagle or homeowner's policy is not available in your state.
Listen, I absolutely love this for our industry and our insured owners out there. Fraud has evolved, and so have we. We listened. we're giving an answer. This is much needed coverage for existing homeowners out there and for people who don't have access to that Eagle policy. So, real estate agents, lenders, this is a really great time for you to reach back out to customers who weren't able to buy that type of coverage when they purchased their property or refinanced it. So, get out your old title policy, folks. Look to see if you have that post policy fraud coverage. And if not, give us a call. We would love to help you out. Matt, I think that covers it for today.
All right. You did it
Get it?
again. I
I
see
did
you
it.
did it
I did.
again.
I
Yeah,
did.
an insurance pun, of
I
course.
did. I did.
Cover, insurance pun. Good. Good job.
Stay tuned for more puns and bad dad jokes. And next time, we're going to talk about some real true crime stories with real estate. And until then, may all your deals be real. Thank you, everyone. This episode is copyright 2026 by First American Financial Corporation. All rights reserved.